Good morning, traders. It is Thursday, October the 10th. Taking a look at the charts, we got the SP 500 and more or less pretty big whipsaw price action continuing to go on. We saw some big selling and overnight trading after the close last night. A couple hours after the close, we saw a big sell-off. You can see this big lower wick, and it ended up recovering in overnight trading in this morning. So huge volatility continues, much like we saw back here in August. You just get one big price swing after another, very fast moving markets, and more or less we are just letting the markets do their thing. They are stuck in this range, and we're going to see which way they're going to break out of this range and go from there. And right now we are in bonds. We might end up getting stopped out for a profit in bonds this morning. We'll see where it goes. We did lock in about 1.9% on the first half of the position, and we moved our stop to break even in bonds, which let me just go over to bonds real quick. Here are the bonds, and if we look at the price of the charts here, more or less, we got into bonds, we caught this move, getting out right near the top for our first profit target. Since then, it's pulling back. It still looks really bullish, but overall, it is set to open lower this morning and down somewhere where our stop is, where your entry price is. So we could get stopped out there. So it'll end up being almost a 2% gain on half of that trade and break even on the balance. And we'll look for some new trade setup going forward. We'll see how things unfold. Bonds could end up actually being oversold this morning and could actually be on a buy zone. So yeah, we'll take a look at if we potentially re-add to the position or not going forward. But we'll see how things shake out. We've got some really weird price action going on today. The dollar is down fairly sharp, and precious metals are down as well. If you take a look at gold, gold had a squeeze up nice and high this morning, and then closing and selling off back down. Silver is doing the same thing, had a push up and back down. Really weird price action going on. So obviously there's some news, some things going on behind the scenes that just don't really make a whole lot of sense. So we are letting the market just work itself out, and we're looking for some new trade setups going forward. Not every day we get some good insight, and a lot of times, just like in the natural gas play, we'll find a setup, we'll play it, and then it takes sometimes weeks or months for another setup in the same asset class to go again. Let's take a look over at, let's go to energies real quick. Natural gas up 0.6%. Again, we had this short covering squeeze after a big, long, extended sell-off into support. Had a bounce and a squeeze, and it's kind of fading back down. We are looking for something similar to this, where a big sell-off, you have a short squeeze, and then it goes down and starts to form a bottoming formation. And that's what we're looking for, some type of bottoming formation over the next few weeks. Could take 2-3 weeks to unfold, maybe longer. But then we're looking for this strong run again, and that's when we want to start to look to get involved and catch this move. So just to give you an idea of how the markets move, I know a lot of people think you need to be in a trade all the time. You need to do lots of trades, but that's not the case. More or less, in terms of how the markets move, we're not looking to short something that we think is going to go higher. Instead, we let it pull back, and then we're looking to get long because the odds are it'll continue higher going forward. So looking at this type of play here, we had a quick bounce. It took several weeks, took a month and change to get to this pattern here where we had a bottom form. You can argue it was an inverse head and shoulders, or more or less it started to break a falling trend line and formed a bull flag. There's all kinds of ways you can see it. And then we got long for this run to the upside. And then we were only in it a few days. We caught our 10 or 12%, and then we got out when all these targets were hit, and then the market does its blow off top and goes all crazy and then fizzles back out. And so all we did is, out of 2 or 3 months of price action, we were only in the play for 5 or 6 days, and we caught the money and we got out. And that's what we're letting happen again. We're letting the market work itself out. Could take, for all we know, another month. We could get long and we catch another quick play. We just want this middle section. We just want the quick, powerful move. Hopefully we don't have to suffer any drawdowns before it goes in our favor. And we just take one trade at a time like that and just kind of plug away. It's what we've done with all the precious metals trades this year. We don't buy and hold GDX. We've got into GLD and UGLD and SIL. We just catch these strong pushes, get in, get out, let everyone else ride the roller coaster here. And we just sit in cash waiting. And it's the low risk way of trading, and just trying to make sure you're on the right side of the market and not trying to pick a bottom. I know a lot of people are trying to pick a bottom and they got long UGAs on all this. They get all sucked into the hype, and yes, it's oversold and had a strong bounce, but it needs to form a bottom. And we need to see this downward momentum shift and start to head higher before we want to get long. And I'm not here to gamble. We're here to make money, and we're here to just get in when the trades are good and move out when the odds are it could pull back sharply at any point. That's when we want to be scaling out and getting out of positions. Let's take a quick look over at crude. Crude sold off this morning. It's rebounded again. It is holding this support zone at this point. If we look at this level across here, it is holding this level. It keeps coming down, testing, bounced, really pushed the upper extreme here with the bombings, and then came back down, and it is more or less forming what looks to be a bear flag, and I think it still wants to break to the downside. We got a sell-off, bear flag, sell-off, bear flag, sell-off, bear flag. This is a pretty significant support zone. This is a larger bear flag that's unfolding, and you could, I wouldn't know if I'd go with this spike, but I would go with something from here and here. This would be the main bear flag. So if we were to use a Fibonacci extension to get a target here, we could go from this move down to this move and the recoil up. This would give us the downside target based on this. This big pop here is more or less a news-based pop, and I usually do a couple different Fibonacci extensions to find a zone. So instead of going even from this one that was still part of the news, we could go from this. This was where price closed. We could go from the next close level here and go down to this low and this high, and this will box us in where the downside targets are for crude oil for if the price starts to drop. So this would be the first support zone. This would be the next support slash downside target where we could see the market sell off. So we could see it sell off here, here, and go down into this area. Or smaller, we could go from this area to this area and just down to this zone. So more or less the sweet spot will actually be, the safe zone will be if it gets down to this level here, which is around 48.60, that'll be a pretty significant zone for the market to at least have some type of bounce before potentially diving deeper down into this 45, 46. There really is, I think, a downside potential of about 44 going to the down. Anyways, that is it for this morning. Not a whole lot has changed. We're just letting all the markets do their thing, and we'll be looking for some new trades, or we are looking for some new trades. We're just waiting for the setups to form, and we'll get back into some new positions and catch some moves. Talk to you soon. Bye-bye.